Okay, right now I'm up about 14,000 on Lowe's leap options right here. I'm going to show you my screen so you can see it right here. In two accounts, I'm up over 14,000 on Lowe's leaps, and I got the leaps a long time ago for around $19, uh, which is around 1,900 for a contract. Now it's all about $100. It's up to almost 90, about 98. Profit total of about 7,000. Same thing with this one here. I got it at that price. Now it's at 83, and it's trading right here. I also own a little bit of Lowe's stock. I'm gonna start buying more of it. I like the stock. I like the company, and let's take a look at that. Uh, right today, it's trading at another all-time high. It had some pullbacks a while back, but all stocks did around this day, and then it's now shooting back up. So I expect the stock to be over 300 pretty soon. The CEO also said they wanted to make sure the stock price is rising. Let's look at the financial summary of Lowe's and see how it's growing. As you can see, Lowe's has been really growing. So even though Home Depot is bigger, but Lowe's and Home Depot in the home improvement section are to me are like Google and Facebook in the ad section. So they pretty much control, and look at their cash flow. Cash position is strong, 11 billion in cash. Some people complain about their debt. They do carry a lot of a high amount of debt, but I don't think it's an amount that's not sustainable. They're able to pay their bills. They have good cash flow, so debt shouldn't be a concern. Let's look at their income statement. Income statement is great. 5 billion in net. So that's great. Let's see balance sheet because people always complain about their debt. Let's look at their accounts payable, short-term debt, accrued liabilities. Yeah, they do have some debt up there, but it's not anything that they can't pay. So I'm gonna go back to the interactive chart so you can see it, and it's a good stock to own. It's a good options to trade. So and let's look at option prices. Look at the you know, let's look at option prices so you can really see implied volatility and historic volatility is low. So a lot of times you'll be better off just buying leaps on stocks like this, buying leaps close to the money. So if I wanted to get a leap that's going to expire a year from now, let's see what I can find. Something a year from now. So that'll be back in January of 2023. And let's see what we have here. Okay, and I expected to go to 300. So I would probably buy up in this. Volume here too. See a little people. Some people are buying already, but yeah, I would stick to somewhere up in here if I was buying when I get ready to buy some new leaps after I cash those in. I'm gonna re-up on my leaps, and I'm probably gonna go over here or around here, depending on where the stock is trading that day. So, leaps are options that expire a year or longer that you hold. So, and that's what I would, if I was you, I would, instead of, owning a stock, you may want to buy the leaps because the leaps will make you a little bit more profit than the stock. So, the stock is going to rise. Let's look at their competitors. We know they got Home Depot to compete with, but it's not on this list. But there's other companies out here that I don't think some of these are really not their competitors per se, but they may be in the same industry. But as you can see, the home repair or retail sector is pretty much growing. The home prices are rising, so you're going to see Lowe's continue and Home Depot. I've already did a video on Home Depot. I've did the same thing with Home Depot leaps. So, but that is it. I mean, Lowe's is another stock you should be trading. You can do your research on it. Um, do some verticals, debit spreads on it, and make you some money off of it. Have any questions? Please comment. Thank you.